Hey guys, Akil Stokes here. Welcome back to another episode of the Trading Coach Podcast. Thank you as always for joining me. Two things before we hop into today's episode. One, this is another video episode, so make sure you hop over to the YouTube or the Spotify if you want to check out the visual version of this. And two, a big thank you to all of you guys that showed up yesterday to support me in the trading battle. It was a super fun yet hectic event. So it was great to have the support there. 4 trades triggered, 1 pending, 2 are out for profit, 1 is out for loss, 1 still messing around there. So pretty happy with how things went so far. And if I remember, I'll try to do some type of either update or review / evaluation of the battle. I think it would be cool to kind of show you guys the differences between what I did, but what I would actually prefer to do if it weren't a trading battle and just me trading live. So no promises, but if that does come out, it will be on the YouTube channel. So make sure you watch that space. Now, after that battle, I was having a conversation with a trader who was dealing with, I guess, some hardships from some recent losses. And he was asking the question of Akil, how do you deal with losses? How do you handle psychology, stuff like that? And it made me think of one of the best trading books out there that I've ever read, and a book that is always in my top 3 when I recommend reads. And that book is going to be Trading in the Zone. Boom! I went through a phase where I ripped off all the covers because I thought it would look sophisticated, so don't mind it. But Trading in the Zone by Mark Douglas. There's another book called The Disciplined Trader as well. But Trading in the Zone is a great book. It's not that long of a read. It's only about, 200 pages or so, right? Compared to some of the other stuff you see in the background here. But it is probably, if not the best, one of the best books on trading psychology. Now, here's the caveat with it, right? I read it after I was already trading. My business partner and good friend, Jason Greystone, read it after he was already trading. And we both agree that it's one of those books that you should read, but perhaps you shouldn't read it until you're already trading. Not necessarily trading live, but at least already have a taste of maybe the psychological battles. Because what happens is if you do it beforehand, you're going to hear about it, but you're not going to really take it seriously. You're going to be like, oh, that would never happen to me. I'll never do that, right? But as we all know, when you step into the arena of the market, things change. And when you're actually living what he's talking about in the book, you start to realize, man, this stuff is important, and you start to really find the things that affect you personally, which allow you to take it more seriously. So a good book, but don't read it until you're already trading. Anyway, what I want to do today, right, is take 20 of the best lessons or best quotes from that book and discuss it with you guys, because the algorithm is always listening. And ever since I had that conversation about recommending Trading in the Zone to that random trader on TradingView, now it's all over my feed. And the first thing that happened when I loaded up X this morning was a tweet from someone named, I'm gonna give him the credit, real LJG Banks. Basically sharing, let me see if I can find the original tweet here, basically saying, Trading in the Zone by Mark Douglas, summarized in 20 quotes so you don't have to read it. And again, what more do we want to hear than I don't have to read 200 pages, I can just read these 20 quotes. But I do think it'll be beneficial for you guys. Now, full disclosure, this is the first time I'm going through them. If you're new to the Trading Coach Podcast, I don't like rehearsing or doing anything like that. I like you to get the fresh, real me. So I am reading these for the first time, so you'll get my pure reactions, whether it's a ooh or a ah or a no or a yay. You get that for what it's worth. Anyway, quote number 1, and these are from Mark Douglas from the book. If your goal is to trade like a professional and be a consistent winner, then you must start from the premise that the solutions are in your mind and not in the market. And I think this is big. What do many traders do when they first embark on the trading journey? They look for the magic system, the magic strategy. There must be a secret out there that makes everyone professional or makes everyone good. When I first started trading, I started looking for the same thing. I said, there's some type of hidden secret strategy that they know that I don't know. And once I uncover it, I'll be successful too. The truth is, I uncovered lots of successful strategies and I still sucked because it was me, right? The thing is, trading, you could be successful in many different ways, numerous ways. I want to say infinite ways, but I don't know if that's actually true, but whatever is very close to infinite, right? And there are many systems and strategies that work. We've spoken about this before. There are trend continuation, there are counter trend, there are price action, there is fundamentals, there are structure based, there are moving averages, there's this, there's that. You can go on forever. It's not that hard to build a strategy that has a positive expectancy, so an edge, something that will produce you profit. The hard part is being able to actually trade that and deal with the roller coaster ride of emotions and self-sabotage that happens when we're trading it. So if you are having a problem in your trading, it might be the system's fault. Yeah, you might be trading an unprofitable system. Hopefully you should know that when you do your back testing. But if you are trading something that was profitable during your back testing and maybe not profitable in real life, the first place to look is often within yourself. And even if you have a strategy that doesn't work or doesn't work to your liking, there's typically a way you can tweak it and change it that could make it work. And that starts with being creative in the mind. So I love quote number 1. Quote number 2, when you achieve complete acceptance of the uncertainty of each edge and the uniqueness of each movement, your frustration with trading will end. And this is amazing. We had a good conversation to end the trading battle on this yesterday, just kind of seasoned vets giving our experience in the market. And there were a lot of people watching the live stream and, we're taking trades, they're ticking up and down while we're doing it live and people are freaking out and we're just sitting here like, yeah, we're so calm, right? And we're not calm because we're drugged up or anything like that. We're calm because we understand that we don't really have any control over the markets. Yes, we can control how we analyze the markets. We can control the positions we're in, the size we're in, the target profits, the stop, stuff like that. But as far as like the market going up, the market going down, the market going against us, the market in our favor, we have zero control over that. And I've been taught in many different aspects of life, control what you can control and don't stress out over the things that you can't control, right? So because I can't control the market, is there any reason for me to stress? No, there's no reason to freak out. I've done my job. I have to trust that I've done good analysis. I have to trust that my stop loss is, or that my entry has been taken due to a signal that says the thing I'm looking to trade is more likely to happen than not. I have to trust that my my stop loss is at a point in the market where I know I'm wrong. And I have to trust that the position sizing that I use is within my predetermined risk limits, meaning that it's not something that's going to hurt me or blow up my account. After I've done all that, there's nothing I can do. I just sit back. Now, the kicker is this, right? You have to gain your confidence in this. And I also recommended a podcast I did. Do I still have it up? I had it up. It was, nope, I don't. It was called The Cycle. The Cycle of Success, episode 1127, how to activate the cycle of success. I think that's a video episode as well, about the belief action result cycle. And it's hard as a newer trader to have that belief because you don't have anything kind of backing you up. You don't have any confidence. But as you gain belief in your system, you're going to take more of the right actions. As you take more of the right actions, you're going to gain more confidence. And as you gain more confidence, you're going to believe in yourself even more, and then you're going to take even more of the right actions, and you're going to get the correct results and stuff like that. That's what it meant to say, right? You're going to believe in yourself, have confidence, you're going to take the right actions, do what you're supposed to do, then you're going to get the results that you wanted, and you're going to be like, man, those results were good. Maybe I am good, and then you're going to believe in yourself even more. But you have to understand that it's out of our hands, and also the law of large numbers, meaning that this individual trade means absolutely nothing. A win doesn't change my life, a loss doesn't change my life. This is just a small bit of a bigger sample size, and the ultimate goal is that the bigger sample size is going to be profitable, not any individual trade in that sample size. Next is, when you generally accept the risk, you will be at peace with the outcome. And I kind of just spoke on this already, but again, the one thing we can control is our risk, and if we're controlling that properly, there's nothing to get frustrated over. One of my trading mentors once told me that you should trade so small that a win shouldn't make you happy, a loss shouldn't make you sad, as far as from a monetary perspective. So think about your risk as being small enough where it's like losing a penny. If you were going somewhere and a penny dropped out of your pocket 10 blocks back, are you really stressing over that penny? Are you going to track back and grab it? Are you staying up all night meaning, I wish I had that penny? No, it was so small that, yeah, maybe you wish you were 1 cent wealthier, but it's not that big of a deal, so you don't really stress over it. Think about that versus you losing a hundo. If you drop a $100 bill, it's a little bit different. Think of that as being a high risk, where now maybe you're running back trying to find it. You're up all night. Where did I leave it? Where could it go? Maybe it changes, what you're doing, right? That is taking too much of a risk, and now you're stressing over it. When you're in that stressful position, you're more likely to make mistakes, whether it's being greedy on the next trade, whether it's entering too early, whether it's revenge trading, trying to make up for that mistake you made. If it's the penny, you just brush it to the side. So when your risk is small and you've accepted that, hey, if this thing loses, I only lose this amount, there's not that much stress in losing, aside from an ego hit if you think that you should win every trade. Ooh, a compound one. 5 fundamental truths. Okay. One is anything can happen. Yes, the markets can do whatever they want whenever they want to do it. We've kind of go over this before. We have no control over what the market does. So yeah, anything can happen. Number 2 is you don't need to know what's going on next in order to make money. We've kind of covered this already, right? We never know what the market is going to do. And especially as traders, if you're someone that's either a day trader or maybe a short-term intraday trader, you can catch small moves, right? I have this trading strategy where I bracket the market, right? Where we'll be in a period of consolidation, and I'll have a line drawn on top of the structure resistance. I'll have a line drawn at the bottom of the structure support. And I'll say, look, I don't know which way this is going to break out. But what I can tell you is that if we break out to the upside and do blah, 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 then I'm going to look to get long. If we break out to the downside and do blah, 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 I'm going to look to get short. So I can't tell you what the market's going to do next. And I get in a lot of trouble with people that are asking for questions, or when they ask dumb questions like, what's gold going to do next? And I said, I don't know. And they're like, well, what do you mean? I don't know. How are you a trader if you don't know? Well, that's how. I don't know. I don't care. It doesn't matter. All I need to know is how to attack it once it shows me which way it wants to go. 3, there is a random distribution between wins and losses for any given set of variables that define an edge. Yeah, and this is kind of the law of large numbers, where bigger picture, I can tell you with precision what my win percentage is likely going to be at the end of the year, what my return on investment, at least the range, is likely to be at the end of the year, right? Because I've done it for, we're going on 18 years now. What I can't tell you is if today's trade is going to win, if tomorrow's trade is going to win, the next week. I can't tell you if any individual trade is going to win. And like I mentioned before, it doesn't matter. I've had years where I've started slow and got hot. I've had years where I started hot and got slow. I've had years where I've been on 40, not 40, but 20 weeks. Yeah, I think about it. Yeah, I think 20 weeks of drawdown. Now, drawdown doesn't mean just losing. It means it's the period between, your previous equity highs and your new equity highs. But I've gone through 20-week periods in the summer where I've just shuffled sideways and did the wounded crab dance. So you never know how it's going to come. I can't pretend to tell you when my hot streaks and cold streaks are going to come. So my job is simple. I just trade valid setups, and knowing that, hey, it may be good now, it may be bad later, it may be bad now, it may be good later. But at the end of the year, I will be profitable as long as I don't self-sabotage. 4, an edge is nothing more than an indication of a higher probability of one thing happening over another. True as well. Our edge doesn't tell us that we're going to win or that we're going to lose. It means that this is more likely to happen than that. And when you combine putting yourself in a situation where you're more likely to win than lose, and if you win, you're more likely to make more than what you would lose if you were to lose, now you've added to your edge and you've given yourself a good place to be in as a trader. Number 5, every moment in the market is unique. Yes, indeed. The market only does a handful of things, right? In general, it goes up, it goes down, it goes sideways. It gives the same classic patterns over and over again. There is really nothing new in the market. But the cool thing about trading, this is what makes it fun, and this is why I love digging into the markets and the charts each and every day, is that it gives you those same things in a unique way. And it's like a puzzle that changes every day, and it's just kind of cool. Next slide. I'm tired already. I don't know I'm going to make it through all 20, but When you really believe that trading is simply a probability game, concepts like right or wrong or win or loss no longer have the same significance. Sorry about that. This is where we talk about process over outcome all the time, where it's like, winning trade, losing trade are different from good trade and bad trade. So many traders get caught up on winning is good and losing is bad. But remember what we just spoke about, right? Randomness. You can have a random win. You can do everything wrong and get a random win. You can do everything right and get a random loss. Like it doesn't matter. What we want to do is we want to chase consistency, and consistency is by taking good trades. Good trades are trades that meet all of our rules, that allow us to exploit our edge, and in trades where we finish them the way we're supposed to, meaning we don't self-sabotage while the trade is in progress or really during any period of the trade. That is going to be classified as a good trade. A bad trade is one where we do self-sabotage. If we take good trades consistently, then we should see the results that we desire at the end of the long period of time. Next up, if you can learn to create a state of mind that is not affected by the market's behavior, the struggle will cease to exist. Amen to that, right? This is where the process over outcome is important. When we focus on process over outcome, we are only focused on executing good trades. It's a game, I think of that, what is that Apple TV thing? Severance, right? Where they're at the computer and they're just picking out little things, right? They don't know why they're picking out little things and what it means, bigger picture. I haven't seen season 2, so don't ruin it for me if they disclose why. But their job is simple, like just follow the process. This is what we're supposed to do. Who cares why we're doing it? But this is what we're doing. And I look at trading being the same way. And when we could focus on not trying to win or not trying to avoid losses, but simply finding those good trades that meet our rules 100%, boom, we're no longer concerned with anything else because the outcome doesn't matter. Again, with kind of compounding everything we spoke about so far, if I lose, does that matter? Does that mean I'm a bad trader? No. Does it mean my system is screwed for the year? No, it's just a loss. It doesn't really matter. If I win, does that mean this? Or no, it doesn't really mean anything. It feels a little bit good when you win. You're allowed to be human, right? Don't get me wrong. But you don't want to let your actions kind of, dictate what you're doing in the market, or your feelings dictate your actions in the market, I should see. So when you can kind of get in that zone where you understand that none of this stuff really matters on an individual basis, all of those frustrations and temptations, they don't really exist as much. Now, I'm not saying this is simple. You don't get there right away. Going back to the belief, actions, result cycle, you have to build this with experience in the market, because any new trader is probably freaking out, right? You see a trade run in front of you, you're like, right? It's okay to freak out. But as you gain more experience in the market and as you have more time of doing the same thing and proving to yourself about what really matters, you'll see those outside kind of feelings and temptations get less and less and less. And really those psychological struggles aren't fully eliminated, but they're reduced drastically. Following up on that, next one, the consistency that you seek is in your mind, not in the markets. Yep, the markets are consistent in being inconsistent while putting in very consistent, repeatable patterns at the same time. But consistency, again, starts with our execution in our mind, doing the right thing, the process over and over again. Remember, the best traders think in a number of unique ways. They have acquired a mental structure that allows them to trade without fear and, at the same time, keeps them from becoming reckless in committing fear-based errors. Now, in general, eliminating fear comes with confidence. It also comes with expectations, right? So we can touch on those two things. The more confident you are in something, the less afraid you are. So, for example, when I was a really, really young trader, we were doing live presentations and workshops, and I had to be, mid-20s, and I'm standing up in front of groups of traders, many people older than myself, and I am forced to give a presentation as a professional. And this is at the time where I barely thought I was a professional, and it was really scary because I was new, and I was thinking to myself, well, I don't have the right to be telling this person who's 20 years older than me how to trade. You fast forward to me now, right? I am no longer afraid of that. I have done it millions of times. I have traded the market successfully for almost 2 decades now. I'm doing the same thing as far as presentations, but the fear is no longer there. Why? Because I have the proof, right? The proof that, yes, I am good. So when you can prove that to yourself in trading, you're going to feel the same way when executing the trade. At first, you're going to be a little bit fearful, a little bit scared. Is the market going to reverse here? Does my strategy really work? Do I have the ability to execute it? But as you continue that cycle of belief, actions, results, and you start taking the right actions, you start seeing the results, you're just going to build more and more confidence in yourself. Now, again, this is extremely hard when you're starting out, and this is why community is so important. It's important to have a community to have support, right? Because when you're out there by yourself and you're sharing an idea, you're thinking about ideas, and you're like, oh my gosh, is it right, is it wrong? You're just in a battle alone with you and your thoughts. When you have a community, you can bounce the idea off someone else. Someone shot me a message a few minutes ago saying, hey, Akil, I thought I saw a bullish pattern. Just let me know if this setup is correct. And I was like, yeah, looks spot on to me. And they're like, oh man, thank you so much. I thought it at first, but then I wasn't sure. And I started having these doubts, and that just makes me feel a lot better. So having that community, having those accountability partners, those trading partners, it helps you build that confidence because someone else is kind of backing you up until you get to the point where you no longer need that backup. Number something, I have no idea what we're at, but whatever. If you ask me to distill trading down to its simplest form, I would say that it is a pattern recognition numbers game. I like that. We use market analysis to identify patterns, define risk, and determine when to take profits. The trade either works or it doesn't. And that's all it is. I mentioned this earlier. It's two things. It is your probability, it is your risk, right? Are you putting yourself in a position that has a higher probability to win versus lose? And are you putting yourself in a position where you can make more on your wins than what you lose on your losses? And there's many other ways to do it. You don't have to even have a win probability that's high. You can have a small win probability if your reward outweighs your risk massively. So there's many different ways to do it. But at the end of the game, it is all number crunching, right? That is what your expectancy is. It is taking your win rate and your average win, and it is dividing it by your loss rate and your average loss, and it is seeing if that number is above zero. And if it is above zero, the numbers say that this strategy is in your favor. Your job is simple. Two things: take the trades you're supposed to take, and two, don't it up. Why do casinos make consistent money on an event that has a random outcome? Because they know that over a series of events, the odds are in their favor. They also know that to realize the benefits of the favorable odds, they have to participate in every event. So the casino's job is, to keep you there because they have the edge in every game, meaning that they have a statistical advantage over you. So the longer they can keep you playing, they will eventually make money off of you. This is why so many people go to the casinos. Maybe they make a little bit money at first. They keep playing and get greedy, looking for that big come up, and then they eventually go home losing money. I did that a lot. The casino will eventually win. That's why there is oxygen pumped in. That's why there's no windows, no clocks. Kind of like supermarkets, right? They do not want you to leave because as long as you're there, they will take all the money you have. When I learned about trading, I became a much better gambler because I started playing the numbers game, right? My game was craps along with my partner. And we went first from going in there and just trying to play reckless things and catch the big win to really playing like a machine. And no, we didn't have the edge over the casino, but we played the numbers that had the closest to the edge. So we would consistently put our chips on the same numbers, 685, 685, 685. And we would often get mean stares from the dealer because we would never do anything different. We would never load up on one of those fancy bets, those 30-to-1 odd things. We would just take the very simple ones with very little payout but had the odds in our favor, and they knew exactly what we were doing. Add a little risk management to that and the ability to know when to leave, and boom, we were very profitable gamblers. When it comes to trading, there are two sides you can stay on. You can either be in the casino, have the market be the casino and do all these random things, have an edge over you and just take your money eventually, right? This is why so many traders start off hot, they think they got it, then they lose money and go broke, right? 90-90-90 rule. 90% of traders lose 90% of their money in the first 90 days. Or you can decide to be the casino. And then when you have a strategy that has a positive expectancy and edge over the market, you now become the casino as long as you are not self-sabotaging. And with that being said, the goal isn't to pick and choose your winners. Once again, just take the good trades consistently. The hard, cold reality of trading is that every trade has an uncertain outcome. Yep, we've gone over this before, so we'll skip past that. What separates the consistently great athletes and performers from everyone else is their distinct lack of fear of making a mistake. Yep, we've gone over that as well. So as I thought, some of these would get repetitive. Rarely will the typical trader stay with his system beyond 2 or 3 losses in a row. And taking 2 or 3 losses in a row is a very common occurrence for most trading systems. Now, this is a good one. I mentioned a little bit ago about the fact that many traders will start off hot. They'll be in love with their system, right? Oh my gosh, it's so great. And then they lose 2 or 3 trades in a row, and all of a sudden, oh, my system sucks. It hates. It doesn't treat me how it used to, right? All that fun stuff. And then they bounce to the next system. We call this system hopping, only to achieve the new thing. They get into that brand new relationship and everything is great, rainbows and unicorns. They're so happy. And then after a few trades, when the losing starts to come, right, when you start to see her without the makeup on, they're like, oh my gosh, this is bad. I want to bail. And then they repeat the process until they go broke. The truth is, if you have gone about your trading the right way, you should know whether 2 or 3 losses in a row is a bad sign or a good sign. I can tell you what, if I take 2 or 3 losses in a row, I don't really care because that is quite common in my trading. When you do your back testing, you have all the data that you need to show biggest winning streaks, biggest losing streaks, right? So you can easily refer to that. And this is what I tell traders to do when they start dripping and leaking confidence, where Akil, I'm in a drawdown. I feel like it's never going to end. What am I doing wrong? And I say, the first thing I say is hey, go back to your backtest results. And I want you to look through your data and I want you to tell me what is the longest losing streak as far as like the amount of trades. And then also what is the longest losing streak as far as like your return on investment. And let's say these traders are on a 3-trade losing streak, which again, big deal. You think 3 trades is rough? Oh, you got a lot to learn, buddy. You got a lot to learn. 17 is my greatest. What's up? 17. It hurt. It hurt so bad. It hurt so bad. Not monetarily speaking, it was fine because I'm good with risk management, but like mentally, that was hard. Luckily, a friend of mine was at 18, so like we teased each other and that, he sucked worse than me. But back to the point, if you're on a 2 or 3 trade losing streak and you go through your data and your data's like, man, I consistently take 6 trade losing streaks in a row, then why are you freaking out? Your data has told you that during the period in which you have back tested, it is a common occurrence for you to lose 6 in a row. You've only lost 3 in a row. This is not anything different than the norm from the expectation. So yeah, just trade through it. You can also, if you're thinking in probabilities, and this is how I personally think is, I know, again, bigger picture, law of large numbers, I know that the probabilities will be in my favor. I know exactly where I'm going to lie, right? So let's say I'm a 60% trader, right? The way I think about it is like this. I should win, and this is a kind of an extreme example because we're working on bigger sample sizes, but in a short period of time, let's say I'm a 60% trader. In my mind, I'm saying, so I should win 6 out of every 10 trades. So if I lose 4 trades in a row, right, instead of freaking out and thinking I'm doing something wrong, I'm like, okay, got the losers out the way, here come the winners, baby. I'm going to revert to the mean. Vice versa, I do the same thing. And if you ever see me get on a hot streak, right, I'll do it in videos all the time where it's like, hey guys, 2 months of heaters, I got like a 10-trade winning streak. And I'll be like, yep, this next one's probably going to lose. It's not because I'm a negative Nancy or anything like that. It's just because the numbers say I shouldn't be winning 10 trades in a row. Like eventually I'm going to have a losing streak, and that helps me mentally prepare. System hopping, bad. Knowing your numbers, good. When I put on a trade, all I expect is that something will happen. Yes, 0 expectations. Akil takes a trade, I get a question, will it win, will it lose? My answer, this for the audio people, I just did like the shoulder shrug, I don't know, right? I don't know. My job is just to take the trade. Something will happen. It will go up or it will go down. I'm going to win or I'm going to lose, right? I can tell you that much. Which one? Got me. If I knew we were going to win, I'd have the biggest position size ever. If I knew we were going to lose, I wouldn't have taken a trade in the first place. So, duh, it's obvious I don't know. We've got to be getting close to the end now. I feel it. I stopped counting a long time ago. But next up, no man ever reached to excellence in any one art or profession without having passed through the slow and painful process of study and preparation. Oh, yes. Yes. There is no shortcut to success. So many traders want to skip past the necessary process that will earn their ability to be a consistently profitable trader. so many traders fail, so many traders fail because they skip past it and they're not properly equipped to do the things that they're supposed to do. So let's go back to the system hopping, for example, right? I told you if you're on a losing streak, go back and check your back testing results and see if the losing streak is natural. Well, what if you've never back tested? Well, now how are you going to determine if your losing streak is natural or it's abnormal? Going back even further, if you never back tested, how do you know if your strategy actually has a positive expectancy? How do you know if it actually has an edge? You could be trading something that actually, you could be doing it 100% right, but you don't actually know that it makes money, right? How are you able to tweak and filter and maximize your trading strategy if you never learn the basic principles of how to read a price chart or how to understand what an indicator is telling you, right? You've got to go through this process, right? There is the process of learning and then relearning and then testing and all this live demo trading, all this before you actually go live. And just so many traders think they can shortcut the process and make the money quick, and then they end up going broke. So invest the time now. We typically say, and Mike Bellafiore will say the same thing, it usually takes anywhere between like a year and a half to get to the position where you can be a consistently profitable trader. Obviously, it's different for everyone depending on where you're at. For some people, it takes longer. For some people, it takes shorter. But usually, anywhere between a year and a half is what's expected for you to be a consistently profitable trader. And we've seen this with our trainees. Mike Bellafiore has seen this with the S&B Capital people. If two great sources are saying this, it ain't no lie. It's going to take time. I think you have to admit that up front and then understand that in hindsight, that year or 2 years that it took for you to become profitable is going to be nothing compared to the multiples of years that you're going to have getting profit from the market. Putting on a winning trade or even a series of winning trades requires absolutely no skill. On the other hand, creating consistent results and being able to keep what we've created does require skill. Making money consistently is a byproduct of acquiring and mastering mental skills. Yeah, anyone can make money in trading, but not everyone can keep it. A long time ago, I had a much higher win percentage as a trader, right? I was winning at like a 75% clip. And so I was winning a lot. But I wasn't actually making any money, right? Because I was giving back so much on my losses for various reasons that I was pretty much just break even. And it never made sense on how I can be a lower percentage winner now, but make a lot more money than I did when I was a higher percentage winner until I actually dug into the numbers and saw all of the self-sabotage that I was doing. So anyone can win, right? We went over this before, where the market could do whatever it wants. It's easy to place an order, right? Just go load up your tab and click it and order is pushed. And if you're lucky, the market might go in your direction, right? Boom, you're a winner. But doing that consistently over time, keeping the money, not giving it back, that's the biggest hurdle that we see with most traders. All right, then we have 4 more. I'm gonna guess just a little bit more. Good market analysis can certainly contribute to and play a supporting role in one's success, but it doesn't deserve the attention and importance most traders mistakenly attach to it. And yeah, you got to be a good technician. You got to be able to analyze the markets correctly to be consistent and get the results you want, right? Consistent analysis plus consistent execution equals consistent results. However, what I take from this is the need for the perfect entry. Whenever I'm teaching traders or working with new traders or just random traders that message me after a video or whatnot, the question is, what's the best entry? What's the best entry? What's the best entry? And the entry is almost irrelevant, right? Bigger than the entry is the prediction. Can you A, predict the likely direction of the market? Can you B, predict the general location of when that turn is going to happen, right? You can have a great entry, but if you have a great entry with a bad prediction, you're just going to lose. You're going to enter a trade and it's just going to go against you and you're going to lose, right? So the prediction process is much more important. And why I say the entry isn't that important, and yes, you got to be able to enter a trade, duh, of course, but I say that because there are so many ways to enter a trade. There are aggressive ways where you can just put a limit order or a stop order in a general place and say, boom, if the price action gets here, I'm going to buy, right? My mentor shifted to that towards the end of his career where he was tired of actively looking at the charts and waiting for a specific entry reason. So he just said, Akil, I'm going to identify the zone in which I think this thing is going to reverse. I'm going to put an entry down there. it can do whatever it wants in that zone, but that's where I think it's going to be at. And he would look for reversals that way. At the same time, you can be super conservative, where you can look for all of the reasons in the world for the market to say that you're more likely to be right versus wrong. So there's not a balance, but there's lots of room between the super conservative and the super aggressive trader, and all of those are right. So there's so much freedom in the entry that it doesn't really matter as much as the general prediction. And this is why the entry doesn't matter. What matters is just that you're consistent with the entry that you're supposed to take. Ooh, another two-parter. Trading rule 1, predefine what a loss is in every potential trade. Yes, know your risk. 2, execute your losing trades immediately upon perception that they exist, right? There's an old saying, let winners run and cut losses short, right? I butchered that, I'm sure. But pretty much you want to maximize your winners, get what you're supposed to get out of the trade. But at the same time, once a trade tells you that you've lost, you want to exit it. You don't want to take on more risk. You want to be as wrong as quickly as possible. You don't want to take on more risk after already knowing that you're wrong. Actually, I told you guys earlier, I'm going to do maybe a little review of the trading battle trades I took. We had a situation like this where I could have saved a lot of money on that losing trade if I exited as soon as I knew I was wrong. And I'll tell you why I didn't do that if that video ever happens. How about that as a tease? Lastly, by predefining and cutting your losses short, you are making yourself available to learn the best possible way to let your profits grow. Nice. Getting tired. Come on, almost there. The typical trader doesn't predefine his risk, cut his losses, or systematically take profits because that typical trader doesn't believe it's necessary. Yeah. The only reason why he would believe it isn't necessary is that he believes he already knows what's going to happen next based on what he perceives is happening at any given now moment. And these are the traders that say this trade has to win, it must win. They're not giving themselves any other outlook than the one that favors them. And like we've been over a million times, you have no idea what the market is going to do, even in the best trading scenarios, right? So because of that overconfidence, they don't do any of the other things that actually matter in trading. And instead of a normal loss that really shouldn't hurt that much, dropping a penny, they take a massive loss because they didn't take the other thing seriously, and now they dropped the hundo. Final one. It's the ability to believe in the unpredictability of the game at the micro level and simultaneously believe in the predictability of the game at the macro level that makes the casino and the professional gambler effective and successful at what they do. Yeah, this is that sums up trading, right? The macro is very predictable, the micro is not very predictable, and we have to be able to blend both those together at the same time. So there we go. 20 great points from Mark Douglas. I'm going to put a link in the show notes as well. There's a YouTube video that I found years ago. I'll see if I can find it again, of Mark Douglas doing a presentation that I really enjoyed watching, that you can watch as well if you want more on that. But yeah, let me know what was your biggest takeaway from this video. If there's one thing that you took, what was it? I would love for you to leave that below. I want to read what everyone says, and then I want to see if there's any common theme there. I think it'd be pretty cool. Maybe we can even do a podcast on that as well. But I appreciate you guys joining me for the Marathon Trading Coach podcast. Like, subscribe, support, rate, review, all the stuff that keeps this podcast going in the right direction. And until next time, plan your trade, plan. Take care. Subscribe to the YouTube channel as well.